Good morning and welcome to T-Hub Capital, the Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
Welcome to T-Hub Capital's The Investors Lounge weekly newsletter. Today's date is the 9th of June. Let's dive into the week's stock market news. European markets advance as ECB eases policy amid easing inflation and US job strength. European equity markets experienced a notable uplift, with the Pan-European Stocks Europe 600 index concluding 0.90% higher last week. This positive momentum was driven by a confluence of factors, including a deceleration in inflation across the region and the European Central Bank's ECB decision to ease its monetary policy, reinforcing market confidence. Robust US jobs data also helped to temper lingering fears of a potential recession. Major stock indexes across Europe mirrored this ascent, with Germany's DAX increasing by 1.28%, Italy's FTSE MIB also gaining 1.28%, and France's CAC 40 index adding 0.68%. The UK's FTSE 100 index likewise saw a positive movement, tacking on 0.75%. As widely anticipated, the European Central Bank proceeded to trim its key deposit rate by 0.25 percentage point, bringing it to 2%, a level not seen since 2022. The decision saw near unanimous support among policymakers, with only one dissenting voice. Following the announcement, President Christine Lagarde signaled that the ECB had nearly concluded its latest policy cycle, a period that has encompassed 8 rate reductions since July 2024. She further clarified that the current policy stance was deemed to be in a good place and emphasized that rate setters were not bound by any preset path, pledging instead to remain guided by incoming economic data. Despite the ECB's cautious tone, financial markets appear to anticipate at least one additional rate reduction, likely in September, as the central bank continues to assess the risks to economic growth and inflation posed by ongoing trade policy uncertainty. Further positive news emerged from the Eurozone, where the economy expanded significantly faster than initial estimates during the first quarter. A final reading of the data revealed that gross domestic product grew by 0.6%, effectively doubling Eurostat's preliminary estimate and marking the fastest expansion recorded since the third quarter of 2022. This impressive increase was largely propelled by strong growth figures from Ireland and an upward revision to Germany's economic estimate. Concurrently, headline annual inflation across the Eurozone experienced a notable slowdown in May, falling to 1.9% from 2.2% in April, comfortably below the ECB's 2% target, primarily due to receding energy and services prices. Underlying inflationary pressures also abated, with the core rate, which excludes volatile energy and food prices, decreasing to 2.3% from 2.7%. The jobless rate within the Eurozone also reached a record low, underscoring a generally improving economic environment. Despite these positive overarching economic trends, industrial output in 2 of the Eurozone's largest economies, Germany and France, contracted more sharply than forecast in April. German industrial output declined by 1.4%. reversing a 2.3% rise from the preceding month, a contraction largely attributed to a weakening in exports. However, manufacturing orders in Germany defied predictions of a 2.2% fall, instead increasing by 0.6%, driven by robust domestic demand. In France, industrial output similarly declined by 1.4%. A decrease from the 0.1% increase observed in March, primarily due to a 0.6% drop in manufacturing activity. Meanwhile, Bank of England Governor Andrew Bailey, who had voted in favor of a quarter-point rate reduction in May, offered a more cautious outlook on the path of interest rates in comments to a parliamentary committee. While stressing that the trajectory for interest rates remains downwards, he added a significant caveat, noting that how far and how quickly rates are lowered is now shrouded in a lot more uncertainty. Frankly, now our insight into alternative markets, beyond billions. Dubai's real estate ascendancy sets a new global standard. In 2024, Dubai resoundingly cemented its status as the Arab world's undisputed powerhouse, orchestrating an unprecedented $207 billion in real estate transactions, a figure meticulously tracked by Knight Frank. This staggering achievement not only solidified Dubai's position as the leading real estate market within the Gulf Cooperation Council (GCC), but also propelled it into the exclusive ranks of global powerhouses such as New York and London. Accounting for a dominant 54% of the GCC's total real estate activity, which collectively reached $383 billion, Dubai's performance transcends mere growth. It unequivocally serves as a bold declaration of its strategic global positioning. This article delves into the intricate drivers behind Dubai's profound real estate dominance, unraveling the visionary strategy fueling its relentless success, and articulating why this monumental milestone resonates as a significant geopolitical signal emanating from the vibrant heart of the Arab world. To truly comprehend the magnitude of Dubai's accomplishment, one needs only to juxtapose its 2024 real estate transaction value against those of its GCC counterparts. Dubai's $207 billion alone dramatically surpasses the combined transactions of the next four largest GCC markets, powerfully underscoring its unrivaled supremacy. With a remarkable 226,000 transactions, representing a substantial 36% year-on-year increase in volume and a 20% surge in value, the Emirates' real estate sector unequivocally reflects a market that is both extensively expansive and inherently resilient. Dubai's exceptional success is far from a stroke of luck. It is, in fact, the calculated outcome of deliberate and multifaceted strategies. A primary catalyst has been its astonishing population growth, reaching 3.83 million residents in 2024, marking an 8% increase from Q4 2023. Dubai continues to welcome over 100,000 new residents annually. This influx, comprising skilled professionals, entrepreneurs, and high-net-worth individuals (HNWIs), has consistently fueled robust demand across residential, commercial, and luxury real estate segments. The city's ambitious Dubai 2040 Urban Master Plan, which projects a population of 5.8 million by 2040, firmly eschews sustained demand for both housing and essential infrastructure. Dubai has also firmly established itself as an undeniable magnet for foreign investment. Ranked among the top 3 global cities for greenfield foreign direct investment (FDI) in 2023, it attracted a formidable $12.8 billion, with over 40% meticulously directed towards real estate and infrastructure projects. Investors hailing from more than 152 nationalities, notably including a significant surge from Russian buyers post-2022, collectively contributed to 43% of the total value of residential properties being foreign-owned. The Emirates' highly attractive tax-free framework, exceptionally investor-friendly policies, and consistently high rental yields averaging 6.8%, with one-bedroom units yielding an impressive 7.2%, collectively position it as a secure haven for global capital seeking stability and growth. Further bolstering its appeal, Dubai's success is propelled by ownership-driven reforms. Pioneering policies such as the 10-year Golden Visa, property-linked residency initiatives, and broadened freehold ownership options have fundamentally transformed Dubai into a city where stakeholders have a vested interest. In 2024, an astonishing 110,000 new investors entered the market, representing a 55% increase. driven directly by these progressive visa reforms and relaxed ownership laws. The strategic announcement of 457 plots designated for freehold conversion in January 2025 further incentivizes expatriates to transition from renting to owning, thereby reducing remittances and deepening their economic ties to the emirate. The luxury and off-plan surge has also been a defining characteristic. Dubai's luxury real estate market remarkably outshone global competitors, recording 388 superprime transactions valued over $10 million in the 12 months leading up to Q3 2024, alongside 948 luxury sales exceeding 15 million UAE dirhams for the entire year. Prime and ultra-prime property prices experienced significant appreciation, rising between 16% and 25%, with iconic areas like Palm Jumeirah, downtown Dubai, and Dubai Marina leading this charge. Off-plan sales experienced a dramatic surge of 50% year-on-year, propelled by attractive flexible payment plans and substantial capital appreciation potential, with off-plan properties constituting a significant 60% of total sales. Branded residences, accounting for a notable 12.6% of transaction value in H1 2024, further solidified Dubai's undisputed status as a premier global luxury hub. Underpinning all of this is Dubai's visionary infrastructure and smart urbanism investments. Over the past 15 years, the Emirate has committed more than $100 billion to developing world-class infrastructure, including transformative projects like the Dubai Metro, Expo City, Dubai South, and the under-construction Al Maktoum International Airport, poised to become the world's largest. Concurrent projects such as the Al-Shandaga Corridor and Hessa Street expansion significantly enhance connectivity, while smart traffic systems and the DLD Smart Rental Index ingeniously leverage AI for enhanced transparency and efficiency. These meticulously planned initiatives, deeply aligned with the ambitious Dubai Economic Agenda D33 and Vision 2040, collectively foster a future-ready urban ecosystem that profoundly drives property desirability and investor confidence. Dubai's real estate dominance is fundamentally a city of intent, not accident. It represents the culmination of over 2 decades of visionary governance, spearheaded by His Highness Sheikh Mohammed bin Rashid Al Maktoum. Unlike markets that are merely driven by transient hype or short-term gains, Dubai's enduring success is meticulously data-backed, with 761 billion UAE dirhams, $207 billion in transactions rigorously recorded by the Dubai Land Department in 2024. Strategically policy-aligned, as evidenced by the Dubai Real Estate Strategy 2033 aiming to double the sector's GDP contribution through innovation and transparency via AI and blockchain. Profoundly future-focused, with substantial investments in sustainability such as LEED-certified buildings projected to constitute 35% of new office spaces by 2025 and a firm net zero 2050 commitment, positioning Dubai as a global vanguard in green urbanism, and ultimately, profoundly trust-driven, supported by a stable, secure investment environment underpinned by progressive laws that consistently attract global investors seeking long-term returns. This strategic alignment has truly transformed Dubai into a city that doesn't just react to global trends but actively sets them. As Sheikh Hamdan bin Mohammed bin Rashid Al Maktoum aptly noted, the exceptional results in 2024 reflect our economy's deep strength and resilience, which continues to thrive in a rapidly changing global landscape. Dubai's staggering $207 billion real estate milestone transcends a mere market headline. It broadcasts a powerful geopolitical signal. From the very heart of the Arab world, Dubai has masterfully achieved what many global cities continue to pursue: a clear long-term vision articulated through the Dubai Economic Agenda D33 and Vision 2040, aiming to position Dubai among the top 3 urban economies by 2033. Governance characterized by rapid policy reforms, such as the Golden Visa and Freehold expansions, ensuring Dubai remains ahead of global competitors. Earn confidence. With 181,000 sales transactions and 522.5 billion UAE dirhams in sales value, establishing Dubai's market as a beacon of stability and a proud identity, skillfully blending its rich cultural heritage with its boundless global ambition, creating a unique appeal for residents and investors alike. For Emirati youth, Dubai's iconic skyline is far more than a collection of towering structures. It embodies a meticulously crafted strategy in steel and glass, reflecting a legacy of leadership that prioritizes innovation, inclusivity, and enduring global relevance. As one young Emirati keenly observed, this is what happens when leadership, economics, culture, and technology align. Unlike other global cities, Dubai's growth trajectory is distinctly not tethered to short-term market cycles. Its decade-long leadership in the global conversation stems from its astute economic diversification, thriving far beyond oil in finance, technology, tourism, and real estate, with a projected 6.2% GDP growth in 2025. This is complemented by its widespread global appeal, evidenced by 948 luxury sales and 121 branded residences, conspicuously outpacing London and New York in ultra-luxury transactions. A steadfast sustainability focus, with projects like the Sustainable City and Evra Residences, aligns with global ESG trends, actively attracting eco-conscious investors. Furthermore, its commitment to inclusive growth is highlighted by women investors contributing 118 billion UAE dirhams $32.13 billion in 2024, representing 34% of total investors, signaling a broadening and diverse investor base. Looking ahead, Dubai's real estate market is remarkably poised for continued robust growth in 2025. With forecasts predicting a 5 to 8% rise in property prices and an average 7% rental yield. The planned completion of 182,000 new housing units by 2026 is set to effectively address rising demand, while ongoing infrastructure projects such as the Dubai Metro Blue Line and the expanded Al Maktoum Airport will significantly enhance connectivity. As the Emirate steadily advances toward its Vision 2033 goals, it consistently remains a beacon for investors, residents, and dreamers alike. Dubai's dominance is not merely a regional triumph, it is a global benchmark. Under the visionary leadership of Sheikh Mohammed bin Rashid Al Maktoum, Dubai has not merely followed global standards, it has unequivocally set them. This is a city that does not merely construct skyscrapers, it meticulously builds futures.
Thank you for listening to this episode of Hub Capital, the Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, don't forget to subscribe to the podcast so you don't miss a single episode, and share it with your friends and colleagues who might be interested. To learn more about T-Hub Capital and our activities, visit our website, hubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the T-Hub Capital team.